Welcome back, everyone. As always, I'm your host, Gary Winter, and this is another video in our Trust 101 video series designed for trustees, professional fiduciaries, and beneficiaries of trusts going through the trust administration process. And the trust administration process, as you know, is 3 phases. The first phase is to collect assets, get them appraised. The second phase is to liquidate those assets and pay bills. And then the third phase is to distribute whatever's there to the beneficiary. So this video is the second in phase 2. Our previous video we covered was liquidating assets and how to sell and whether we need to sell and considerations on how to do that. This particular video, we're going to talk about paying bills. And so there are a few things to think about in terms of paying bills. The first ones are some bills that trustees typically need to pay. The second I'll talk to you about is using the trust bank account to pay those bills. The third is paying CPAs and attorneys. And I've had a couple of comments and questions on that, like how much does CPA fees normally run, or how much do attorneys' fees normally run? So I appreciate your questions and your comments on these videos, and I'll work in wherever I can some answers and explanations. So let me get started with, first of all, what are some bills that trustees typically pay? Well, they will pay any and all of the bills associated with the trust assets. They'll also pay the final expenses of the person that set up the trust. If they passed away and we're administering the trust now, we've got final medical bills. We may have some funeral expenses. We've got some utilities to pay on real property, and there may be some outstanding credit card bills and that sort of things. Even maybe mortgage payments on property. So those are all normal things that a trustee is going to pay. Another bill that trustees pay is taxes. And let's take a sidebar here for a second and talk about taxes, because this was another comment that I had on a previous video, is a question about the different types of taxes and whether a trustee needs to pay those. So there's a few different types of taxes involved in trust administration. The first one is the income taxes, the final income tax of the person who passed away. And that's done on an IRS form 1040, if you're familiar with those. And that just reports the income that the person earned on their Social Security number, using that as their tax ID. And it's usually filed in the year or after the year that the person passed away. So you have a partial final year tax return, a final 1040 for the person that passed away. And the CPA can prepare that, and there may be some income taxes owing for the person that passed. That would be a bill that we'd need to pay on behalf of the grantor of the trust. Another trust or another tax that the trust would need to pay is the income taxes accessible to the trust itself. So if the trust earns income during the trust administration period, for example, if we had a rental property that we're holding in the trust and the trust is receiving rents from that property, that's income. And so we may have enough income to actually pay tax during the period of trust administration. Now, during our trust administration period, once that person who set up the trust passes away, their Social Security number stops. And then in the beginning of trust administration, we talked about obtaining a tax ID number. This is like a Social Security number for the trust. We don't want to use your Social Security number as the trustee, because we don't want these taxable income and so forth or expenses to hit your return. We want to have a separate tax ID number just for the trust. So this trust is its own taxpayer, and it will need to file its own tax return. We call it a fiduciary tax return. It's a IRS form 1041 that's prepared and filed in April of the year following when we're doing trust administration. So if you have multiple years of trust administration being open, you're going to file multiple years of these 1041 income tax returns. In most cases, trust administration has more expenses than it has income, and so it's not frequent or often that I've seen where we have a large income tax bill for the trust. But it can happen, and it's something that you as a trustee need to watch out for. The third type of tax is called estate tax. An estate tax is a federal tax where we would prepare a Form 706. And that particular type of tax is based on the asset size or the estate size of the person who passed away. And a trustee might in fact be instructed to pay those taxes if there are any. And let me reassure you, because everybody wants to know, well, is my estate subject to estate tax, or the so-called death tax? And over the last several years, our estate tax exemption amount has been going up, and it's at an all-time high now at 12 million, or just over 12 million in exemption per person. And so what that means is my estate size could be up to $12 million, and I don't have to pay estate tax. So for most of us out there that are not worth more than $12 million, we don't have to pay estate tax. And so we're not worrying about that. That does not necessarily mean that we're not going to file a 706 estate tax return. There are some situations where it may be wise to file it anyway, especially on the death of the first spouse. And I don't want to get into too much detail about that, but important to recognize that you should at least ask the question, if you have a larger estate, as to whether or not it might be wise to file a 706 estate tax return, even if there's no estate tax liability. Might be a good idea. But these are some things that you can use: a licensed CPA to prepare and file your final income tax return for the person that passed away, the final 1040, and then file your 1041 trust income tax returns during the period of trust administration, and then consider or take a look at whether or not we're going to file a 706 estate tax return. So those are a few things about taxes, and hopefully alleviate your concern about estate tax liability if you're under that 12 million threshold. If you're concerned about the estate tax exemption, one thing you may want to be aware of is that the 12 million estate tax exemption that we currently have in this year, which is 2021, is due to sunset and drop back down to 5 million adjusted for inflation beginning January 1st of 2026. So it won't always be the $12 million threshold. It's going to drop back down to 5 million. So for you trustees who are dealing with trusts and estates after 2026, you may want to talk to your CPA and ask them what the current exemption is. Don't assume that you don't need a Form 706 estate tax filing. All right, when a trust pays out bills, it should do so from the trust bank account. Back in the beginning, when we opened trust administration, we got you appointed as the trustee, you sent out notices, and we pulled a tax ID for the trust. You take your affidavit of successor trustee and your tax ID, and you go into the bank and you open a trust bank account. When you pay bills, you should be paying bills using a check, not cash. Don't use the ATM. Don't use your personal account. Use the trust bank account to pay bills. It's important to note trustees have a duty to not commingle trust funds with their personal funds. You want to keep those things separate. Really critical in terms of your accountability to the beneficiaries and just being a good fiduciary of these assets. So we don't want to use your personal money. We don't want to put trust monies and deposit it into our personal account. Those funds, when you liquidate and sell assets or sell a piece of property, it needs to be deposited in the trust bank account with the trust tax ID, and then use a trust check to pay for the bills of trust administration. That way you keep things separate and you don't commingle the funds. Trustees also have a duty to account to beneficiaries unless they waive it. If you have a friendly group of family beneficiaries, they, at the end of trust administration, they may sign off and waive a full accounting of trust administration. Nonetheless, you should be able to produce an accounting, and you want to plan on doing it. And so in order to keep a record of the bills that you paid, we suggest that you want to use a check. Don't use an ATM card. I don't even encourage people to use credit cards. It's better just to use a check so you've got a written record of what you paid and how much it was. Okay, question was asked, a comment was put on a prior video. What are some reasonable charges for CPAs and attorneys? So I want to talk a little bit about paying CPAs and attorneys for trust work. First of all, use a CPA that has experience with trusts and estates. Not all of them do. Most CPAs I think are certainly capable of doing a 1041 trust income tax return. Very few of them actually do 706 estate tax returns regularly because those are more infrequent, but you want to use people that are really experienced and regularly work with trusts and 1041 returns. Also, they should be familiar and prepare accountings. Accountings for trusts are documenting the assets that we started with in our appraisal, income to the trust, expenses from the trust, gains on sale, losses on sale, and then we end up at the end of trust administration with our assets on hand available for distribution. A full accounting is like a financial story of trust administration, and trust CPAs or CPAs who are familiar with trusts prepare those kinds of accountings. And if we need to do a formal accounting because we have lots of beneficiaries or if our beneficiaries are not particularly friendly, then we need a CPA to give us that complete financial history of the trust. Total CPA fees are going to vary, obviously, depending on how many transactions are happening within the trust, how many assets are involved. For smaller trusts, I think you can generally plan on CPAs charging somewhere between $150 and $250 an hour for their work, and it usually works out to somewhere between $2,500 to maybe $3,500 in preparation of returns, advice and counsel and explanation on tax consequences of sales and so forth, and generally helping with trust administration. So somewhere in that neighborhood. Obviously, if you've got a big trust and you've got a lot of assets and you're dealing with a family farm and farm equipment and land and leasing and all that kind of stuff, it's going to be more. But that'll give you an idea. For most of our trust administration, that's $1 million and under, you can probably plan on $2,500 to $3,500 in CPA fees. Attorneys do different things. We can, but we don't usually prepare trust income tax returns. We don't usually prepare accountings. We help advise and coach you and educate you about how trust administration works, and we protect you from disputes from the beneficiaries. We help you comply with the law regarding notices, and we help you sell assets and advise you on the timing of those things. And we prepare the legal documents along the way to make those things effective. And so attorneys in trust administration generally charge somewhere between $300 and $400 an hour for a good, experienced attorney. Can you find an attorney with a rate less than that? Of course you can, but I don't really recommend it because it means that they probably don't have the experience that you want to be able to guide you through this. You want somebody who's been there and done that and done this not once or twice, but like hundreds of times. And so use an attorney or firm that is focused on trusts and estates. People that specialize in it are really good at it as part of their core practice area. There's a really big difference between your friend who's a personal injury attorney or a bankruptcy attorney and in your trust and estates attorneys that specialize in this area and advise people in this realm all the time. You don't want a generalist. This is something, it's better just use a specialist, work with an expert that's done dozens or hundreds of trust cases. So total attorney's fees also are going to vary depending on the trust and the complexity of what's going on and how much work's going on and how much we're being called in to coach and to guide and advise on what's happening. But with rates about $300 to $400 an hour, it adds up very quickly. So it's not uncommon to see $3,000 to $4,000 even on relatively modest trusts in getting that coaching and getting the legal work done along the way. So if you have a smaller trust, I would be prepared to spend at least $3,000 to get really good help in serving you and counseling and advising you in your trust administration process. If you have a larger trust and there's lots and lots of assets, obviously it could be more. Final topic, paying yourself as the trustee. So another bill that needs to be paid is trustees compensation. So first of all, with trustee comp, in California, trustees are entitled to reasonable compensation, whatever reasonable means. And generally it would mean it depends on the facts and circumstances of your particular trust administration. If you're doing vanilla trust administration, there's nothing particularly complex about it, and you're a layperson, you don't have special set of skills, like you're not a CPA, you're not an attorney, you don't have any professional fiduciary experience, then you may be charging somewhere around $40 an hour, maybe $50 an hour for your services. I always recommend that my trustees start at the beginning of trust administration and keep a time log. Track all of your time and what you did, where you went, who you talked to, and just put a note down. Doesn't take much, but 2.2 hours, and I talked to the attorney, I went to the house, I did this, I did that. Start keeping that log, use a spreadsheet, use a notebook, whatever's easy for you, but keep that time log because we want to be able to justify to our beneficiaries at the end, this is how much I'm charging for my trustees fee. And I think it's fair because here's my time log. I got 300 hours into this thing, and I'm going to charge a reasonable rate, $40 an hour, and so I'm in for whatever, $1,200. And so keeping a time log is really important. You can take a flat percentage of the assets. Once in a while, people do that, but it's a relatively small percentage, usually 1% or less, depending on what's going on with the trust. And so if you don't keep a time log, you might be able to do that, but it's easier, and I think it's cleaner if you keep track your time and do it on an hourly basis. You can also, as a trustee, you can also reimburse yourself for expenses. So let's just say you're at the notary's office, you're needing to get some things signed, and for whatever reason you didn't bring your trust check account. So you don't have a trust check to write to the notary, so you pull out some cash and you pay the notary to sign a trust document. That is a personal expense that you've advanced on behalf of the trust. Get a written receipt from the notary, get a written receipt from whoever you might personally advance funds to, and keep that receipt, and then keep a log of your expenses that you've advanced on behalf of the trust, and you can reimburse yourself for that. And the timing of that is usually, you don't need to wait on reimbursing yourself expenses, but I think you could do that pretty much right away as long as the trust account has cash in it and you keep track of it all. But we generally advise trustees to wait to pay themselves their fees, usually until the end of trust administration, because trust administration generally takes 6 months, 8 months, something like that, maybe 9 if we're trying to sell real property. But if you can hang in there for a few months, it's better to sort of disclose your fee methodology, your time log, your track time, and send that out to the beneficiaries as part of your final report and your plan of distribution, rather than pay yourself along the way and then have somebody object to it later on. So consider holding off and waiting to pay your fees until you're ready to do that final report. So anyway, quick review. Paying bills, make sure that you pay your bills out of the trust bank account. Trustees are going to pay all kinds of bills, final medical expenses, they're going to pay funeral expenses, they're going to pay taxes. We talked about the different kinds of taxes, final personal income taxes, trust income taxes, potentially estate taxes if we're subject to them. And we're going to pay CPAs and attorneys, and then eventually we're going to pay ourselves a trustees fee. So we went over all of those things, and congratulations if you're at this point in your trust administration process and you've gone through phase 1, you've collected assets and you've appraised them, and now you're in phase 2 and you've liquidated the assets and sold them, and now you've paid all the bills. This is the end of phase 2 of trust administration. So pat yourself on the back, you made it this far, and join us in our next set of videos. We're going to cover phase 3, which is the trustees' final report. We'll talk about accountings in detail, and we'll talk about our proposed distribution plan and how we generate those things, and some tips on protecting you in the process. So as always, thanks for watching the video. Don't forget to click like or subscribe to see notifications of our next videos in the series, and keep your comments coming. Let me know, as I address several comments in my video today about CPA fees and attorney's fees. So if you've got a topic that you'd like us to cover, then put that in the comments down below. We read all of those, and I appreciate them. So thanks for watching, and I look forward to seeing you in a future video.